Hey everybody, it's Pete. Welcome to Stock Trading Pro today. Welcome to today's Stock Market Live. We have a ton of stuff to talk about. After last week, the stock market got smashed on Thursday and Friday after what seemed like a really nice rally on Tuesday with the bullish gap. And then we had Tesla earnings coming out and looked good for a moment, but the sellers took over. We're going to talk about which stocks to buy this week, which stocks are in play this week. We got a ton of earnings this week. We also have a really big level that we're going to keep an eye on in the S&P 500 this week. If it breaks that level, there's a lot of room to go below there. So we need earnings to be bailing us out this week. Amazon is reporting this week as well. Plus, they have the stock split coming up not too far in the distant future. What's that going to mean for the stock? And will the stock hold the bid up until then? We're also going to do sector rotation. We're going to break down a little bit of a long and short type of thing. We're also going to talk about hedging stocks today. I've mentioned it quite a bit. We have a lot of new members on the YouTube channel here. So we're going to bring up what hedging means, what it looks like to actually be hedging a stock, inverse ETFs versus puts versus actually outright stocks. I'm going to mostly talk about hedging using stocks because I think that's one of the most common ways of doing it. And it'd be kind of fun to teach. A lot of people are new to that part of the market. The market's actually going down right now. So we need to kind of protect ourselves with ideas going in both directions the way the market's trading right now. I will tell you that professional traders right now are leaning a little bit more on the short side, which means betting on stocks going down right now. Thursday and Friday was amazing if you understand how to short sell stocks. We do have a very specific game plan for the market today. We have a bunch of what we call snapback trades today, which is bullish stocks that have pulled back for a little bit, that we're actually looking for them to go down on the open today and then find buyers after the open. So we have a ton of stuff to talk about today. I just want to say, Anthony, good morning. How's it going, pal? So stick around. I'll be back in just 1 second. Okay, if you happen to be new to the channel, if you can please do me a favor, if we provide some value for you today, make sure you click down and subscribe, hit that like button if we give you what you like today and make it worth your time. Every Monday, Wednesday, and Friday, we do live streams. Tuesday, Thursday, and Saturday, we have new videos come out. So make sure you hit that subscribe button. All right, so we're actually going to get right into it. We're going to talk about the rotation coming into the week. This is Friday's closing price action coming into today, and you can see what Friday looked like. Just devastating. Tech, actually, which broke down in a big way. I'm surprised that it's not near the bottom of the list. Healthcare has been rolling over, just to give you an idea on some of these stocks. Let's take a look at the futures. They're actually down, but not down as much as they were before. So, you know what? That's actually an interesting thing. We actually get a lot of questions, too, as well as how do you start your day? And what do you do when the market is, between the time you wake up in the morning and the time that the market opens? And a lot of it is reviewing the game plan that you have already created coming into the day. And I'm going to show you what that means. I'm going to give you a little bit of a glimpse into our community, a little bit behind the scenes, just to show everybody what's going on in there. So let me bring this in, and I want to show you, because a lot of the stuff that happens is starts out with obviously research on sector rotation over the weekend, which will show you there. Then I'm running all of my scans and I'm doing ideas of what I'm looking at to trade coming into the day. Then I'm breaking down everything down into my spreadsheet, which I'll show you in a second. And then it comes down to what I actually plan to do for the day. So what I want to get across here is all of the game planning feels like it's happening when the stock market, like you're heading into the day and the stock market happens. But I want to tell you, if you want to take this seriously, you have to do the game planning the day before. And I'm going to tell you why. A lot of people are like, oh, I have plenty of time to do it. I could do it in the morning. I wake up early. I have my coffee. But let me ask you a different question. Hey, Mark Badash, how's it going? Good morning. Let me ask you a different question. What if you happen to be busy in the morning and you can't get to it? What if some unforeseen thing happens? Car accident that delays you getting to the office. Your internet goes down for the first 2 hours that you wake up in the morning and you don't have a chance to do it. Act like a pro and do it well before, which most people do it the night before. The way that we teach everybody to do it is you do it on the 7th. You do it 7 o'clock at night and then review it 7 o'clock in the morning. So all that stuff that I just showed you, that's done well before I wake up in the morning. And again, if you're a hard worker and you love to read, I'm sure I'm not going to tell you anything that's different right now, but you need to get all that information into your head so it kind of meshes around in there. And that's where the conviction comes from. A lot of people ask, where does trading conviction come from? And it comes from doing that work. So you do all that work at at night, let's say you commute home or the market ends, you go to the gym and you come back to your desk, whatever it happens to be, do yourself a favor and start your research prior to the next day. You'll be so thankful that you did, because that's when you're going to be relaxed. There's no other way to put it. So hashtag act like a pro. You'll start seeing those kind of results. So we're actually going to break down the market. We're going to start there, and then we're going to get into some of the earnings plays, and specifically the SPY. The SPY is actually a big deal right now. Everybody knows that the 50-period moving average is where we've been kind of hanging out. We couldn't get out of this window for about a week, maybe about a week and a half. Bearish gap, bearish gap. Looked pretty good here. This last Tuesday was just absolutely amazing. Sellers came in and the market shoving it down. Now you can see this level here. This was the Russia invasion of Ukraine, but we found two supports just after that. But here's what I want to point out. Support, resistance, and a big level here. So this 416. That's the level you want to write down for this week. So when we're watching the market this week, there's two big things. There's the Monday opening price. How do we trade around the Monday opening price? Three things. What does the VIX do this week? So the volatility index, and let's just take a quick look at that. And we'll actually take a look at this on multiple time frames. You can see how it rallied, right? And actually look on the 5-minute charts. You can see the 2-day rally that we had here and here specifically. So the reason I'm bringing this up is I want to help you get prepared for this week, the week of May 25th, April 25th, 2022. Is the number one thing is that 416 level is a monster support level that we need to hold in the S&P 500. If the price in the S&P 500 gets down to that level, that's where we're going to be looking for buyers to step back in. Now, we have a ton of stuff going on. We have the FOMC next week. We have all of these earnings this week. Now, here's the thing that you need to pay attention to, and we talked about this the last FOMC meeting. So I want to show you the chart because it's kind of playing out the same way. Now, do me a favor, type in the chat whether or not you think they're going to raise by 25 or 50 basis points. I think it's universally accepted right now they're going to raise by 50, and they're going to get a little bit more aggressive each meeting, which is, again, John Bates is on here right now, who spent it last week. We're talking about the reason the housing market is so unbelievably strong right now. Resales, doesn't matter what it is because everybody's trying to lock in those interest rates to buy houses. So they're up paying higher because that 30-year loan is down. So let's see. Min is saying 50, 25. Interesting. Let's see. Scott Henderson, good morning. How's it going, pal? Elizabeth, yeah, I think that most people are expecting 50. I think most people are expecting 50 right now. So what does that mean? This is what we're going to talk about here on the chart. So this is higher level stuff, right? We can all read the IBDs and everything that we read over the weekend, the journal, all those kind of things. Oh, by the way, I don't know if anybody's ever read this book, 0 to 1 by Peter Thiel. If you own a business, this is really a fascinating book to read because he gets into, you should be looking to build a different business, not a Me Too business. So if you're on this call right now, you're an entrepreneur, that is definitely a book to read. Darrell Temple. Where's Darrell Temple? We have to set up a phone call. I know you had a couple of snafus with getting in touch with our team. I want to get you on the phone so we can talk. So anyway, let's hop on over to the SPY, and I want to bring this into what we talked about the last FOMC meeting, which was here. Okay, a lot of people were saying the market's breaking down. You can see that we're actually right. That's where we actually formed that big support that we're leaning on right now. Right here. This was Monday, Tuesday, and this is the day of the announcement and what happened after the announcement. Now, here's what I want to prep you for. Now, this isn't happening until next week, but I want to prep you on this. If you want to learn to be a tape reader, you want to really elevate your game in the stock market, you need to put the pieces together. We get a lot of questions about what we do. What we do is order flow and tape reading. Those are the two primary things. Pick a side and then build that argument for choosing to accept risk. So that's order flow and tape reading. You need to do that right now because the market's selling off down into that support level again prior to the next FOMC announcement. So this is the same thing that happened last time where it was all doom and gloom until that FOMC announcement, which basically started as soon as the new year started, and we're selling off. The announcement happened, and then we rallied. Now we're kind of doing the same exact thing into next week. So what does that mean? This is where you got to start to put those pieces together. What does it mean that we're already selling off prior to that happening? It means it's starting to be priced in. We have to factor that in. The market hates. The stock market does not like indecision. And right now, the indecision was kind of answered on this on your replies there in the chat. Is that 25 or 50? 25 or 50? That's what's the question right now with the FOMC, Jerome Powell. What are they going to do? Either way, once it's announced, we can reasonably expect that that indecision is out of the market. I don't know if we're going to have that same vicious 2.5-week rally like we did last time, but more importantly, if you are a long-only trader and you are looking for spots to buy stocks, you're looking for the best stocks to buy now, you're looking for the best stocks to buy prior and after that announcement, you have to think, am I buying this pullback into these major support levels, or am I going to wait for it to rally and get a little bit more validation? I will tell you that professional traders are looking for a reason to be a buyer right now and looking for support levels to manage that downside. So the way that I'm looking at things right now is I'm actually looking for continued bearish moves to the downside because, look, let's face it, are we expecting earnings to be amazing right now? How many earnings have really been awesome the last quarter or so? I mean, IBM is really the one to me that's hanging in there the best. So, by the way, that's a trade that I want to give you today. IBM held up like an absolute rock star last week after earnings. This is where the earnings came out. Their cloud business was pretty good. We keep talking about this 138 level being a big level. Got above there, held for a couple of days, and now it's just below. So IBM is one stock coming into this week that had relative strength that I'm looking to buy. Want to work our way over into the earnings this week because you really need to be on top of the earnings, especially if you're looking to play. And we're also going to talk about the Twitter news with Elon Musk. Again, love him or hate him. Oh my gosh, the guy has such an amazing influence on so many things right now. And I guess there's benefits to being the richest man in the world. You'd be like, hey, I'm just going to go get $43 billion in financing and I'm going to go pick up a public company. Just amazing. Absolutely amazing. So we'll talk about that in a second, but I want to get into the stocks that are reporting earnings this week so that everybody can have a big list. So we have KO today is one of the ones that are reporting today, Coca-Cola Company. But a little bit further into the week, and again, we're going to compare some of this to the industrial stocks. You can see that the industrials are kind of working their way up the list. So they closed negative on Friday, but for the week, they were actually the number 3. So when we're talking about UPS, it's clearly still in bearish price action. And if you look here, there's really only minor support all the way down here. Earnings coming out tomorrow. It's going to be interesting. Is the earnings already priced in with UPS? So we'll keep an eye on that tomorrow as well. So these are all earnings that are coming out on Tuesday. UPS, that matter to me. General Electric is coming out, 3M. Now, again, let's elevate what we're doing here. If we want to take the stock market seriously, we're looking through these charts. Are you looking at them from a money perspective? Is it priced in? Is it still bearish? Is there an idea? Is it stuck in the middle of nowhere? You need to be making these decisions now, not after earnings gets announced. I can't express that deeply enough. That's when you're reacting, and that's when you feel like you have absolutely no control of the outcome because something happens and then you react. Something happens, then you react. Professional traders do not do that. Professional traders, which I hope you're aspiring to do because you're on the call with me right now, is you want to be in control of the outcome. So when you're looking at charts, you need to be saying to yourself, is smart money positioning for something before it happens? And you see that with price, you see that with volume, you see that with support levels, you see that with other stocks in the same industry group. Okay, so we're going to keep walking through these right now. I hope that we're thinking a little bit deeper. What we do is not complicated. As a matter of fact, it's pretty easy. But I want to say this again because it kind of takes all the mystery out of the market. Once you know what you're looking for, you're no longer lost. That's where the key is. That's kind of like the secret sauce that everybody wants. Now, look, nobody can guarantee that you're going to make money. Anybody who does that, run away from them because trading's a skill. You have to learn what to look at, and then you have to learn how to apply it. But, and here's the big thing. Once you know what you're looking for, the very first thing, the magical thing that ends up happening is you learn to mitigate risk. You learn to decrease the downside while you're around long enough to understand how to make more on the upside. That's the magic sauce of trading. The problem that a lot of traders have is they try and make money first. They try and step on the gas before they even understand how to drive the car. So if I can give you any feedback from my experience now, which actually last week was my 22-year full-time stock trading anniversary, learn to manage the downside first, but the easiest way to do that is to only look for very specific things. So again, all we do is track and piggyback the order flow, and then we read the tape to determine the size and the quality of that idea. All right, so let's get back into some of these ideas. These are all still on Tuesday. All right, waste management coming out as well. But I think the big dogs that everybody's looking for right now are Microsoft and Google. So again, what's going on here? This is a look at the room to the downside. It's like the Grand Canyon below that, but that's a pretty significant level. We keep dancing right around that level. We're below it again this morning. And Google's another big one heading into this week. So I just can't stress strongly enough. And this is the big thing I want to talk about right now. If you had to give somebody else a picture of what the market looked like right now, what would you say? Would you say it looks great? Would you say it's neutral? Would you say it's bearish? I would say it's neutral to pretty bearish right now. Neutral meaning we just came out of basically a week and a half trading range, but a lot of individual stocks are breaking some pretty key levels, 20-day breakdowns, 50-day breakdowns, the stocks that are making new 52-week lows versus new 52-week highs. That's all skewed to the other side of the market. So I want to talk about this before we even, like the week even starts. We have basically an hour and a half, hour and 45 minutes before Monday even kicks in. What kind of trader are you, and what are the circumstances that make you feel conviction with placing orders? Are you trading both sides of the market? Are you buying and short selling? Are you only long only? This is the thing I want to get across. There is a really big headwind this week with all of these earnings reports, on top of the market getting smashed on Thursday and Friday, breaking down key levels. Here's where I'm going to challenge you. Okay. This is really where I hope I'm making a difference for you, because I didn't know this stuff when I first started trading. I thought the market rang, ding, 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 and you have to do something. That is not the case. If the market unfolds in a way that matches your roadmap of this is a good opportunity, whatever that happens to be, again, order flow and tape reading is the way we do it. Only then should you be involved. If you continue to trade and the market does not look like your game plan or your edge or your strategy, shame on you. That's the stuff that I talk about. We're mitigating the downside, knowing what you're looking for, and then taking action only if it's there. That is what will make you somebody special. I can't express this strongly enough. If I could take off my stock trading pro hat and put on my Pete hat and be your friend, if I was talking to one of my friends from Holbrook, from Long Island, where I grew up, and they were asking me, I want to start getting involved in the market, I would say the first thing we need to do is define the edge, which I'll give them my edge. And then we need to only do something when it's there. So I'm telling you this as you know, as your lifelong friend right now. If the market is confusing you right now, there is nothing wrong with being in cash. And I know we're on YouTube. We want to get stock picks. I just talked about IBM, right? The big thing is to really understand when your edge is there. So I'm going to challenge you on that. If you have questions about that, leave a comment below the video, not in the chat, not in the live chat. Leave it below the video, and I promise I'll get back to you. All right. So now we're going to work our way over into some ideas and break down the ideas for trading this week, which means we're going to break it down. Actually, you know what? We're going to do hedging. Hedging was a big question that we had this last week heading into this week. Again, if you have questions about anything we discuss on these videos, leave that comment below the video, not in the live chat, because the live chat is not as easy to read the comments as the one below that. So I want to talk about hedging and what that means. So we have stocks on both sides of the market. So you can see our performance for the month. We have real estate, consumer defensive, which we've been talking about for quite a bit. We see industrial starting to work their way up the list. But then we have stocks that are negative and breaking down, which, by the way, some of them have earnings at the end of the week. Chevron and ExxonMobil both have earnings scheduled for Friday and breaking down a little bit right now. But here's the thing. We got a lot of questions about, do we look at something that popped into this list in the first day it got there, or do we look at something over a little bit bigger period of time? And really what I'm looking for is the month when I'm looking to hedge, when I'm looking for order flow. So don't forget this. Higher time frames dominate. When we're looking at charts, and let's just take a look at ExxonMobil here again. When we're looking at this chart, whether it's on a day, whether it's on a week, and whether it's on a month, what we're really looking for is how long has somebody been paying higher prices? How long has somebody been selling into that? And then we start to drop down and we time our entries into that direction. So get a question about, well, it's going down. Why would I be looking to buy it? Well, it's not going down. It's been going up for the better part of 5 months. Which time frame you plan to monitor as order flow has to be in sync with your trade objective. How long do you plan to hold the trade? Do you plan to hold it an hour? Do you plan to hold it a day, 2 weeks, or 2 months? And you might say, well, I'm just going to put the trade on and let's see what happens. That's bullshit. You can't do that. You need to know what your objective is, because if you have no idea what a potential profit on that trade could look like, you're not going to know the appropriate risk and you're not going to know the appropriate share size. You can't go into every deal and say, I'm just going to put $10,000 in this deal and $10,000 in that deal. It doesn't work that way, not at the highest levels if you want to see your account grow with reliability. So I want to get into some of the long ideas versus some of the short sell ideas. And I'm just going to use the game plan. You could probably take a screenshot of this. I don't normally do this, but I'm going to give it to you this morning just to give you an idea to really bring this visualization home with you. When we're talking about hedging stocks, we're talking about buying strong stocks and then short selling weak stocks. So you're actually doing them at the same exact time. So what you're doing is you're looking for the strong stocks to go up. You're looking for the weak stocks to go down. Even if the market, the bigger picture of the market gets weak, those long ideas will probably hold up pretty good, like IBM did last year, while the market's going down. So your long positions, the stocks you bought, might go down just a little bit, but the stocks that were weak that you hedged with will go down stronger, which technically should cover the losses on the long positions. When the market bottoms out and starts to go strong again or go back to the upside, you've now made money on the stocks that were going down that were your hedge, and you're still holding that long position, which is the one that you liked in the first place. So how do you do that, and which stocks do you look at? So we're actually going to break that down on the sheet over here. So if we go into the S&P 500, and we're actually looking at the last 5 days, this is last week's trading, you can see there have been pockets of opportunity. Broadcom, IBM, Intel, which actually reports this week. Obviously, we're looking for Tesla to reclaim that bid again. Target's been strong. PG has been strong. PM and MO, both of which have been strong. We also talked about the other stocks such as DG and DLTR. So any one of that group of stocks that we were just talking about, which were really strong over the last 6 weeks, those were stocks that we'd be considering to be long, to be a buyer of. We would expect that the buyers would step back in. Now, to hedge on the other side of the market, we're really just buying, we're putting on trades that should work out whichever direction that the market goes. So strong stocks tend to stay strong. Weak stocks tend to stay weak. They're in that position because somebody with a lot of money and research has opinion on that, and then they put that opinion out into the market and they take action. So we just gave a big list of stocks to buy. Now, stocks on the other side of the market are stocks that already have weakness, and we're looking for them to continue to go down. Now, again, this is for educational purposes, but I just want to give you an idea of how it can be done. Sometimes it could be dollar for dollar, but I'm just going to give you an example of how to start out with hedging to at least understand what to do and understand the mechanics. So let's say you want 500, you buy 500 shares of whatever that stock is. Now, again, the dollar amount is what matters. 500 shares versus 300 shares. 500 shares you buy, 300 shares you short sell. On the surface, that sounds pretty cool, right? But what if that 500 shares cost you 50,000 and the 300 shares cost you 5,000? Big difference, right? So what you want to try and do when you're thinking about your hedge is you want the dollar amount to kind of be the same. The share size is then going to be dictated by the dollar amount and the position size that you get. So we just talked about probably 7 to 8 stocks to be a buyer of. Now we're going to look at some other stocks to hedge against those long opportunities. Long means you bought the stock versus short selling. These stocks already have bearish order flow. You're going to short sell them. Again, this is for educational purposes. The strategy is to short sell them, that if they go down, the profits on the stocks going down will protect your profits on the stock that you bought. The highest level of trading is when the stocks stop going down, you take the profit on that one and then you start working the position that you have as a long trade. I got to tell you, if that's new to you, this is where trading gets really fun, because it's 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 a whole different way of looking at the market, where instead of just putting yourself in a position to say, well, stocks are getting crushed, I'm going to guess. There's no reason to guess, because we already have stocks going in the other direction. So the obvious question then is, how do you find stocks to hedge against the stocks that you bought? And that's where you go back into the same map that we were just looking at, which is right here. So you can see over the last week, but I'm going to actually bring this out to the last month, because I want a little bit longer term bearish environment. So we can see the financial stocks have been weak over that period. Nvidia and some of these tech stocks, especially semiconductor stocks, have been weaker. Disney, Netflix, and all of these guys have been weaker. Obviously, Netflix got absolutely clobbered after earnings, but then also some other stocks in that same group, such as Roku and Disney, also broke down. So now here's the thing. As with anything else, and we just talked about this at the beginning of today's call, that trading is a skill. It's something that you need to first understand what to look at. Once you understand what to look at, then the next step of being a successful trader, let's just call, whatever language you want to put on successful. For some people, that might be $1,000 a month, make some extra money. Somebody else, that might be $100,000 a month. We all have different goals, resources, objectives, and those kind of things. The first thing is to know what you're looking at. The second thing is to learn how to use it. So if the first thing is understanding order flow, we just talked a little bit about which stocks have bullish order flow, which means demand, which stocks have bearish order flow, which means they're going down right now. The next step is to understand the market conditions. So we just broke down the market. The market is bearish right now. But I know a lot of people on this call only like to buy stocks, but the market's a little bit heavy right now. So it's kind of scary to be a buyer right now with the way the market's going down. So we talked about IBM as a tech stock that's going up. And then we talked about NVIDIA and AMD, which are heading down right now and have been heading down for a while. So a professional trader would be looking at this from the perspective that I'd like to be a buyer of IBM because it's showing strength, and I'd like to be a short seller of AMD or NVIDIA or Roku or Netflix or any one of those on the downside while the market's going down. So if you could imagine that you're just protecting your stock you bought with profits on stocks that you expect to go down. Is this advanced? I don't know. I'm willing to bet you if we spent a little bit of time together, I could teach it to you within a week. That's for sure. But again, a week, is that a long time to learn something like this that could protect your profits if stocks go down? What's that worth to you? I think that everything that, look, I got a whole stack of books here. I got a bunch of stack of books there. Every day you should be waking up saying, I want to be better than I was tomorrow. So here's what I'm going to do. I'm going to challenge you. We talked about a bunch of stocks to buy today. We talked about a bunch of stocks to short sell. We mapped out the market. Pretty much gave you the entire game plan for what we're looking at this week. We also talked about the opening price. We talked about, is the market priced in with the Fed next week? Also, we got to talk about this main story right here. Clearly, that's a big story that's going to dominate Wall Street this week. Twitter advanced talks to sell itself to Elon Musk. That's just absolutely amazing, amazing price action. So we want to talk about Twitter because we had a lot of questions about this last week as well. Personally, I am only day trading Twitter. I do not want to get caught in a news story that either has a massive gap up or a massive gap to the downside. It sounds exciting, but what if this doesn't go through and you're all pumped up after the thing rallying for 5 days? This is still speculation at this point. It's all conversations. It makes for amazing headlines. It keeps Elon Musk in the news every single day. Personally, again, I'm giving you a little deeper insight into day trading or professional trading. I am only taking advantage of the daily intraday volatility and volume. I'm not looking to carry an overnight because this story can change in a heartbeat. This is a really big, interesting story, but I'm not carrying it overnight. I just want to be clear about that. I'm only looking to take advantage of it intraday, which again, I hope that's inspiring you to think about some of the plays that you are putting on. Are they in your control, or are you hoping something happens? That second way is not really a good way to feel confident. That's what we want. We want every day on these videos. I am hoping that I could lift your confidence because you know what you're looking at and because you know how to apply it, not because you can predict what's going to happen next. I'm going to tell you straight up, you don't need to know what's going to happen next. You need to know what's probably going to happen next, but what you definitely plan to do. It's that combination that a lot of people get confused with. I can't predict the market. You don't need to predict the market. You need to pay attention to where the money's flowing, where the order flow is every single day, every single week. And you need to map it out from Monday to Tuesday to Wednesday to Thursday. Then all we're doing is we're piggybacking where the smart money is already spending their time and money. It's a pretty easy way to trade. Again, I'm not guaranteeing anything. I'm telling you that the process is easy. Then we need to learn how to do it together. But isn't it easier? Imagine you owned a store. Let's say you own a Walmart or whatever it happened to. Just use that as an example. And you're the guy in the back who's taking in all these receipts. And you can see like, oh my gosh, sporting goods through the roof. Wouldn't you invest in sporting goods? That's what we do with sector rotation and breaking it down into industry groups. We're not guessing. Where is the market? Where are the sectors? And then how do we read the tape and find the optimal entry to get into those ideas? I hope that's something that you're looking to strive to do right now, because the stock market, it can make you doubt yourself, but it will only make you doubt yourself if you're not sure what you're looking for. So if we break this down a little bit further and we go into the ideas for this week, obviously I already talked about IBM, right? IBM above 138. That's a big one. Healthcare stocks have gotten absolutely pounded, but we do have a couple of them that are holding up. J&J is holding up. Lilly is not holding up. So again, you got two different sides of the market there. Other stocks that are reporting later this week, Caterpillar, which is scheduled to report on Thursday with Apple, looked amazing on this breakout, just got absolutely clobbered with the rest of the market. And Apple's still kind of stuck in the middle of this window. So I want to leave you with this today, and I hope this makes a big difference for you. And I just can't express this strongly enough, okay? The market is going to be a tornado over the next 2 weeks with all of the earnings this week and the FOMC next week. It's going to be a day trader's heaven and even a short-term trader's heaven because of the volatility and the volume that's going to be associated with all of this news that's going on right now. If that matches what you plan to trade, get in there with confidence, manage the downside, and learn how to make money on the upside. If the market is too volatile and you're like, I don't understand what the heck is going on right now, please do yourself a favor. If it doesn't make sense to you, dial it back, go golfing, go to the club, go do whatever you have to do. But if it doesn't make sense, there's no reason in the world for you to accept risk if the market is not making sense the way you want it to look. So I just can't get that across strongly enough. There's so much opportunity over the year. You don't have to be involved all the time. But, and here's the thing, if it does match what you look at the market from, so if it does match your strategy, you have to trade with conviction. I just can't express that strongly enough. You cannot hesitate. If it's there, see the trade, put it on. See the trade, put it on. That's what's going to separate you from everybody else who says trading doesn't work, from somebody who has a plan and you spend every day just following that plan. All right. This is your first time with us. Please do me a favor, hit that subscribe button. I would really appreciate it. If you got some value, definitely smash that like button. That would be awesome too. It lets me know you like these kind of videos. And just a quick heads up, our next boot camp starts next Monday. So I'd love to see you in that as well. Have an awesome day, everybody. Let's have an awesome week. Let's keep this conversation going because we're going to have a lot of stuff going on this week. I'm pretty excited. All right. Have an awesome day, everybody. Thank you so much.